thank you for joining me on another CEO barbecue. My name is Antonio, and today I'm taking you with me to Quebec, where we're going to be looking for high-grade gold. Being barbecue today is Matt Manson, the CEO of Radisson Mining. Before all that, though, I would like to warn you that we have received monetary compensation for the production of this video from the company that's being interviewed. Please understand that this channel is a business that sells content producing services to companies, which means you cannot rely on this video for research, and you should treat this as an advertisement instead. Research is conducted by reading the company's official filings, which you can find on setterplus.ca. Please only watch this if you know what you're doing. This interview is intended only for experienced junior mining speculators because mineral exploration, development, and mining is a very tough business where failure is the norm. This is going to be a conversation that's general and impersonal in nature, containing forward-looking statements. I am not a licensed financial advisor, so before continuing on, please talk to an investment advisor with a good long-term track record because your capital may be at risk. If you're not 100% sure you understand 100% of those disclaimers that I just showed you, please go to the last section of this video and do not consume this content unless you fully understand and agree with everything said therein. That all said, Radisson, of course, is a gold-focused exploration company with 2 assets in Quebec, and its shares trade as RDS on the TSX Ventures Exchange, where the 52-week high is 38 cents and a 52-week low is 15 cents. With a market cap of $126 million and 345 million shares outstanding, today this is a 36.5-cent stock, so very close to that 52-week high for a change. And I spoke with Matt a couple of months ago toward the end of December, so not that long ago, where I also did an overview of the company's financials and whatnot. There's also a playlist with all the previous conversations Matt and I have had since sometime last year, I believe. So please head over there if you're not sure what this company does exactly, because I have a lot to go through today. So I'm not going to be doing a company overview, and I'm going to be jumping straight into your last couple of news releases, Matt, because so starting January 13, about a month or so ago, you announced your 2025 outlook and exploration and development plans for the O'Brien project. So we'll start there. How much, and we'll kind of start high level and then talk about some of the specifics. How much of this 2025 drilling is meant to improve your understanding of the model versus adding more depth extension and looking for more high grade?
So it's almost all big, courageous step outs below the existing resource. So
Yeah.
we've taken the view that we're not going to nibble around the resource. We're not going to be doing infill per se. We've got about 1 million ounces from our 2023 mineral resource estimate. And so we think there's about a 3 million ounce resource here. Ultimately, it's going to take us a lot of drilling to get there. And that's taking what we have currently and projecting it down to about 2 kilometers, which we think is the natural floor of the exploration. And so it's a realistic target. And really the drilling is about proof of concept for that. We started this style of drilling in the fall of last year. And we had we talked about a deep hole that we had that was about a 500-meter step out below the base of the old mine, the first drilling below the old mine in 70 years. And that hit about 30 grams over 8 meters in core length. So, and then we had other step out holes 170 meters below the base of the resource on what we call our trend 1, just to the east of the old mine, and that hit about 27 grams over 6 meters, and then other hits as well. So we're following a model, frankly, that the Richemont mines followed back in the day. Your viewers may remember Richemont mines. It was a Quebec a gold miner mining the Island Gold deposit, and the Island Gold deposit as a mine back in those days, this is about 10 years ago now, was a bit of a bumpy road, and there was a question: well, do we sort of focus on fixing the mine, or do we sort of start drilling at depth? And Richemont began drilling at depth, and with these big step outs, and began hitting some beautiful intercepts. And so by the time that the market cap went from about 100 million to 700 million with that style of drilling, and when Alamos bought them, the resource was about 1.7 million ounces. It wasn't huge, but Alamos saw the potential, and they were correct in that assessment. The market kind of criticized Alamos at the time, I think, for overpaying, but it was the correct deal. IAMGold is now 5 million ounces and still growing, and it's a cornerstone asset for Alamos. So not comparing our deposit geologically to that, they're quite different. But the strategy of taking your exploration budget and doing these big step outs to demonstrate proof of concept of a bigger potential number is how we're approaching this year's drilling. Ultimately, before O'Brien's mine was going to have to be detailed infill drilling, delineation drilling, but that's not for right now. Right now, it's we want to know the scope of this thing and where it's going. And so almost all of the drilling this year is that type of step out drilling.
Help me better understand kind of the strategy around that, and maybe just go more in depth on what you just said. Because if you're serious about near-term development, why even go that deep in 2025 is what I'm thinking. I mean, last year you've shown that mineralization extends to depth, which may be good depending on the circumstances, which we discussed last time as well. But why not just focus on the stuff that is between surface and 600 meters, get that PEA out and start working toward either developing or selling the project as is? I mean, where's that idea coming from that deeper is better?
Well, first off, we don't see this as a standalone mine. It could be a standalone mine in the future, but right now we see it as an ore supply for somebody else's mill. So if you're conceiving of your project as a standalone mine that needs to support its own mill and its own tailings facility and a relatively large capex, then you need 10 years plus of mineral reserves as a minimum. And so you need to have conducted a whole bunch of infill drilling and detailed delineation drilling to get a 10-year reserve. If the project is conceived of a spoke in a hub and spoke operation, and you're integrating it into another mine plan, then maybe a 5-year type outlook on higher quality resource is going to give you a mineral reserve is what you would look for. And then you'd look for how much of a resource do I have after that. So you're doing your 5-year plan, right, within the context of a bigger mine plan, and then you're looking to see what your resources are afterwards. And so it's a different perspective on how you run a drill program if you see it as a standalone or as a non-standalone type project. In our case, it behooves us right now to know what the value of our asset is, right? Is our asset a 1 million ounce deposit, or is it a 3 million ounce deposit? And we don't necessarily need to have that as a resource. We need to have proof of concept that this type of mineral deposit is going the way we think it's going. And so right now we've got about 1 million ounces. That probably supports about, right now, a 9-10 year mine plan. Half of that is indicated, half of that is inferred, right? So that would be a PEA that's what that kind of PEA right now on existing resource would look like. And we've said we're going to go down that path and show people what that looks like. But so we can do that. But what is the best use of our dollars right now? Drilling the existing resource and improving its confidence, or understanding, if there's a lot more than 1 million ounces there, right? And I think quite clearly drawing from that Richemont experience, which was very successful for them, and ultimately the right thing for them to do as a company, we want to have a proof of concept of where this deposit might be going on that bigger scale. It's courageous drilling, right? We're drilling where we don't have ounces, right? So we're going to get misses, right? We did 7 holes in the fall, 6 of them hit, right? It was a terrific success story. That's telling us that this system is continuing at depth. They're not all going to be like that, but it's so far so good. And we think we've got a eye into what's happening now. I mean, when we drilled that 1,500-meter hole that was 500 meters below the old mine, we really had no idea what we were going to hit, right? We just wanted to see the right type of geology. And we would have been happy just to have the right type of geology with no gold, because we were looking for a pilot hole that we could then use directional drilling and wedges off to hunt around. The fact that we hit 30 grams over 8 meters was terrific, right? And that's telling us is that it's a pretty widespread system at that depth, right? Just for that to happen. So that's the plan for this year. These are holes that take quite a long time to drill. We then get down with the pilot hole and we do directional drilling and wedging off there. And we'll do about 22,000 meters that way this year, and budget's about 6.8 million to do that.
Hmm. Well, the language around a potential PEA in this news release, and in that case, wasn't uh, as clear to me specifically around timing. So, is this work going to be enough for a PEA this year, and when do you want to have it out by?
Yeah, so we didn't say timing in the news release, but it'll be the sort of the first half of this year.
Hmm.
The work has already started and is reasonably well advanced. The PEA is very contextual, right? It is we've been doing a milling assessment collaboratively with IAMGold around the Douai mill. And of course, that's consistent with IAMGold's stated desire to find ore supply for that mill and our stated ambition to find a mill. So having established the viability of that with the recent network that we put out last Monday, we can now do a PEA that conceives of that mill as the destination of the ore, right? With certain processing parameters and the integration of our mine with that mill and a tailing strategy as well. So without that, we haven't been able in the past to do a PEA, right? On that basis, right? It was always going to be a standalone project. So now we've identified the mill, it's feasible, we've demonstrated it's feasible. And so we don't need to do a PEA on a what if basis, right? That'll be the destination. So what we said in our disclosure is, the team's been hired to do that PEA. We're going to use the 23 resource. We're not going to try and integrate any of the new drilling into a new resource. That'll be for the future. We're going to just go with what we've got and sort of demonstrate what that is.
Why not? I mean, why? Yeah, why not?
Well, I think we've got a 9 or 10 year mine plan already with the existing resource, and we don't need to. I think it takes it takes a lot of heavy lifting to go through a completely new resource. I think the resource of 123 is of high quality. It supports that 9 or 10 year mine plan right now. So we can use that right now with this milling assessment work and do the PE right now. And then, by the time we get to the end of this year, we'll have another 50,000 meters of drilling, drill holes from both the sort of the upper parts of the ore body, but also these lower parts of the ore body. And then that'll probably be the moment to actually then go to the sort of the next iteration of resource. But we're quite comfortable right now going with what we have for this next stage.
Who's this PA going to be for? And let me kind of clarify why I'm asking that is I mean, are you trying to show what you have, a set it in stone, if you will, no pun intended, for retail investors to see it? Or do you want to attract bigger investors, either from the institutional side or maybe even from the strategic side? I mean, who is this being prepared for?
I think it's all of the above. Radisson has been drilling this deposit for many years successfully in adding ounces on a steady basis, but never actually been able to put a formal valuation on the business. What is this? What does this look like? What does this look like in terms of ounces per year, and what does it look like in terms of cost and value? So I think we have the ability to do that now. But the audience is really, again, we don't see necessarily Radisson as a standalone operation. It'll go to most efficiently and in a way to deliver most value. It'll go to one of the many existing mills in the region. So I think it behooves us now to sort of know what we have, right? What do we have in terms of metallurgy and recovery? What do we have in terms of mine plan of ounces, tons, and grade? What can we deliver to one of these mills, and what's the value of doing that, right? For whatever comes next, right? Whatever the corporate future of the company is, I think it behooves us now to understand what that is.
I do want to talk about metallurgy in that recent news release of yours, but what is that corporate future of the company going to be? I mean, you and I have touched upon this before, if I remember correctly, but what is the end game for Radisson in your opinion? I mean, what are the aspirations that you have for the company's future, and have they changed over the past couple of months as you've done the deeper drilling?
So I think what we've said sort of repeatedly. I think, and well, first I'll give you an answer which is somewhat sounds somewhat kind of cliched and trite, but it's absolutely true. It's ultimately what delivers the most value for shareholders of this company, right? So that's ultimately where we're going to be. And right now, we believe that the most value for shareholders is delivered by um, seeing this project developed in the context of one of the other mines in the area. And that's either done through that's one of three ways to do that. There are three ways to get your ore into somebody else's mill. There's toll milling, specialized, contract mining or selling ore. There is, which is actually a quite hard thing to achieve because you get bogged down in transfer price negotiations, and ultimately the owners of mills don't necessarily want other people's ore in their mills. They'd rather sort of, find the ore within their own properties. The second way it happens is the most common, which is an acquisition, and that's what's happened recently in the Abitibi. Our neighbors O3 have just been acquired by Agnico Eagle for exactly that reason, and having gone down the path of a toll milling agreement for some time, and Agnico ended up just buying them. The third way is you have some sort of contractual or business deal where assets are put under similar ownership, right? It could be a joint venture or it could be asset combination type thing. So those are the three ways it's done, right? I think I think the reason why I'm here, the reason why the board is the way it is. It's a very blue chip board at Radisson, as you know. People like Pierre Baudouin is the chairperson, and Michael Gentili's involved, and Peter MacPhail, former chief operating officer of Alamos, and my chairperson of Marathon Gold, but he's on the board, and others, Lee Chenard, Cindy Valence, Jeff Swinoga. The reason everybody's there is, we're not particularly interested in drilling deposit for the next 10 years, right? We're there because there is a deal to be done of one of those three types, right? One of those three types integrate our project into that broader system, right? Ultimately, if this project does get up to 3 million ounces, it will support a standalone project ultimately if it gets that big, and we think it's going that big, but we don't see that as the value path. The value path is integrating it right now into one of those other operations. However, that's to be done, and that's probably as much as I can say about that. I think the metallurgical and the milling assessment press release that we put out last week was really important to us because that is what people have wanted to see, right? Ever since I joined the company in July, the question has been, well, how do you process this ore, right? Tell us about the metallurgy. We hadn't really had that data out there before. There had been bits and pieces of network done in the past, but nothing that was as comprehensive as we've just done. And whether it was an institutional investor or just a stakeholder in Quebec mining. There used to be a roaster on beside the highway at the O'Brien mine, so that gave everybody the impression that this was refractory ore, and we got lots of questions about that. And also the corporate crowd who own the mills, right? They've all had the same question. We want to understand the metallurgy of the ore, what recoveries would you get, and how we process it through our mill. So that was why that press release was so important for us. And it is a signposting press release for what lies next, because what we demonstrated is we have options with the processing. The recovery numbers are very respectable, they're high, and we have different flow sheet options that work on not just at the Doyen mill, but a variety of other mills in the region.
Again, those to touch upon there. Definitely want to get to the med stuff. But just a couple of more things on the corporate future of the company before we get into it. Have you spoken to any of your smaller neighbors with regards to maybe a potential merger? When we talk about a potential takeout or you operating the mine on your own and having a toll mill agreement, what about a potential merger? I mean, there's plenty of small to mid-sized companies that could fit that profile. Is that something you would explore?
Well, it depends what we're talking about there. I mean, mergers for merger's sakes, just to create something that's bigger, is opinion is split in such things. All right. You know, some people see the merit in that, and we've got too many companies, and let's consolidate. And people like to have sort of consolidation kind of strategies, and then some people think, no, no, that's just ultimately that's it's all about the asset and what the asset can do, and that's where value lies, right? So um, with Radisson, to be honest, I tend to be the latter, right? We have something that's quite rare, right? Which is a well-developed resource that's taken a lot of drilling, that's high grade, that's getting bigger, that's sitting right beside the highway, surrounded by infrastructure, in the world's best mining jurisdiction, surrounded by other people's mills. So that is the best articulation I can make of why I came to Radisson Mining,
Mm,
right? And so, given that, you don't necessarily think, well, let's merge with this other small company next door, because bigger is better. You don't take that view. You think, I've got something which is uniquely valuable here. It's particularly rare. I'm in a roaring gold market. What's the best way to derive value from that situation, right?
mm,
And the best way to derive value for that situation is to demonstrate how amenable our ore is to those other mills. And so milling assessments, metallurgical work, the MOU we have with IAMGold, that's all in that category. And also then, how big is this thing going to get? So that means we don't do infill drilling and nibbling drilling. We do the big step outs and we go to depth. So all of that's consistent with that strategy, right? Um, uh, so that's probably how I'd answer that question. I mean, it's we are recognizing the rarity and the value of our asset and seeking to maximize its value at this particular moment.
What about the bigger companies then in that case? I mean, when you talk to them, if you talk to them, I'm assuming you do, but what are they telling you? Do they want you to get the project to a certain stage or to a certain size or anything else in order for them to get more serious about, just straight negotiations for them telling you, hey, we want to take you out? What is kind of the profile of what they would want to take out?
Well, so we do talk to other people, everybody, and as you can imagine, in the Abitibi, there are in Quebec and Ontario, in central Canadian gold mining, there's lots of companies, lots of assets, uh, and everybody knows everybody else's project very well. The projects have usually been around for a long time. New discoveries are relatively rare. Um, and specifically, what owners of mills are looking for is ore supply to keep the mills going. So the pattern, we have a graphic in one of our in our PowerPoint presentation which shows all the hub and spokes in the region, just between Rwanda in the west and Val-d'Or in the east, which is about an hour and a half drive time between those two mining centers. You have, I think, five separate. Is it five? I think it's five. I'm trying to remember the graphic. You'll probably put it up. We have a bunch of different hub and spoke operations that are based upon mills that perhaps have been around for decades. In the case of the Doyen mill with IAMGold, it's been there since the original Doyen mine that was built by Cambior back in the day. And the Doyen mine, which was a big open pit, went through that mill. And then the Muska mine went through that mill. Westwood is just the latest ore body to go through that mill. And there's also the Grand Duke and Wyatt satellite deposits have gone through that mill as well. So these are mills and tailing facilities that are mature and have been upgraded progressively over the years and have perhaps taken different flow sheets and different metallurgies as they've gone from asset to asset through the years as well. So there's a whole bunch like that. La Ronde, which is the mothership mine of Agnico Eagle, has that's the old Bousquet camp. It's Lapa went through there. You've now got Malartic doing a strategy of acquiring O3 for the Marban deposit. That's going to be now hub and spoke. You got Sigma Lamac, which is the original Sigma mine and the Lamac mine, and then other deposits that are going through the Sigma mill. It's always the same pattern, right? And the motivation is to not shut the mill, to not close the tailings facility is to find successive ore bodies in this very richly endowed part of the world to go through these mills, right? So it's a fill the mill strategy, right? And I think Agnico Eagle actually used that expression specifically as fill the mill, and the rationale for the acquisition of O3 was a fill the mill perspective on that mill, on the Malartic mill. And so, yeah, so look, in a fill the mill world, you don't want to go and build a new mill, right? You don't want to go and build a new tailings facility. It's a fill the mill world. And so we're sitting there with high grade ore, can be mined at 1,000 tons a day, produce a certain gold production profile for a certain amount of time, right beside the highway with mills around us. And so how would so that the question I had, and I've said this in other interviews, is the number one question that we've had since I came on board as a CEO is the metallurgy, is the processing, right? Because our neighbors are looking at us from a perspective of mill owners wanting to understand how this ore, sitting beside the highway at those grades, is going to go through their mill, right? So answering those questions is a way for us to unlock that value in the company. And then what happens next, where this company goes in that regard. I mean, I think, let's see, right? Let's see. I mean, I think, again, I think there's options here, and I think there's good quality ore and a good quality resource, and, we'll see what the next step is going to be.
I often joke about it that the two most common answers I get is it depends and we'll see. Geologists typically like giving those answers, and it's
Well,
true.
you're asking questions that are hard to answer.
Have you managed to talk to IAMGold since your network was released though, and kind of start working toward essentially what you would want, formalizing a toll milling agreement because you have a non-binding MOU with them now, as far as I understand it. When are you going to make it binding? Are you going to make it binding? What are they telling you about the network?
Well, I think we're working quite collaboratively with IAMGold. They've obviously been in the tent um, as we've gone through this network. The network was done by us with SGS in Ontario, Osenko supervising, but obviously with the IAMGold guys in the tent. We're in their tent when it comes to the Doyen mill and its design specifications, its operating parameters. They've been very collaborative with us and with our representatives on understanding how that mill works, what they're thinking about their tailings management in the future is as well, because that's an important criteria when you're thinking about milling. So I think it's been a very collaborative and constructive technical exchange. Um, the conversation continues, right? I think again, now that on our side, it's now sort of let's do this PEA and let's understand sort of from a mining point of view what that mill kind of looks like for us. And we'll see how it develops. I mean, I think again, not something I'm at liberty to discuss too much. There are confidentiality provisions here as well. But it's how I describe it as, ongoing conversation, constructive, technical, and fruitful.
Hmm. Constructive and technical reminds me of the fact that if you end up going with them, or if they end up going with you, their mill will need modification and restart of their flotation circuit. Is that something you would have to pay with in that case? Is that something that would just be contract dependent? Is the idea that they would just restart it for themselves? What would that look like?
Yeah, I think it's too early to say exactly how that would work out, right? We've been very focused on just the technical specifications of how it would work, and that's why when we disclosed our network last week, we put out three options, all of which we think are feasible, right? And I'll take you through the options. The first option was just gravity and then whole rock leach using their comminution circuit, their two-stage grinding circuit, and then using their existing two-stage leach circuit at Doyen CIP-CIL. So that gives us an 86% recovery if we just use what's there currently, right? Whether that's blended or batched, however, but just the same flow sheet, right? So 86% is basically no capital. I think we would estimate a small amount of capital, less than $1 million, to upgrade the gravity circuit principally, I think. But that's basically minimal, right? We described the capital implications of our three options as minimal to modest. So that's the minimal one. The next step up is if that mill does have an old flotation circuit from when the Musca deposit was processed there, hasn't been used in a while. So we would upgrade or replace that, but the mill has the capacity to have a flotation circuit. It's had one before. And then we'd put in so we'd have gravity, then we'd have flotation. We'd then end up with the flotation concentrate, regrind that to a smaller particle size, and then you're leaching your float con after regrind, and you're also leaching your flotation tails through the same CIP-CIL circuit. So that gives us 90% recovery. And then there would be capital for the flotation circuit and for the regrind circuit. Modest capital, but not huge. We then presented, so that's the modest capital. Then we presented the third option, which was we take the flotation concentrate and we sell it to an offtake agent who wants that float con, to a smelter, or to whoever wants to buy it. And we would not regrind it. And so there'd be slightly less capital involved in that because we're just doing the flotation, but not the regrind circuit. And we get higher recovery from a smelting process, but with a payability factor on the gold recovered on that. And that would be very much based upon the content of the concentrate that we're selling. And so we gave a range of 94 to 96% overall recoveries if we do that, with the range being based upon a 90 or 95% payability factor with whoever's buying the concentrate. In all of this, so that was 86 at the low end for minimal capital, 90%, doing it, on site at the mill with a modest capital, and then up to 94, 96% for slightly less capital on the basis that we're selling the float con, right? Now, the three options were presented in the context of our arsenic numbers, because of course, this ore has an arsenal pyrite sulfide association, which was one of the major questions we always got. I think we've knocked the whole recovery kind of question on the head here with those numbers, which are very respectable recovery numbers, just with modern grinding and flotation and leaching. On the arsenic side of things, we put out the number of the percentage of arsenic in the whole rock, 0.4 to 0.5, and that's coming from the arsenal pyrite. And again, very common for quartz sulfide veins in the Pichet unit, adjacent to the Cadillac Lar Lake break in the Abitibi. So this is very, very traditional, mineralogical, metallurgical profile we've got here. So 0.4 to 0.5% in the whole rock. That is relevant if we're doing a whole rock leach and sending that material to on-site tailings management, and then having a tailings management strategy for that. 4.6% was the number in the float con, which is relevant if we're selling a flotation concentrate to an offtake partner, because that's influencing the payability factor, right? So all of that press release had everything in it, right, for those three options. And all three options are credible, right? The 86% is credible because that's exactly what's there. The 90% is credible because that is what has been there in the past and can be there again. The 94, 96% is credible because, we're confident that that profile of concentrate with those criteria is a saleable product on that basis, right? And we've had some guidance on that basis as well. That's given us the confidence to have that in a press release as a viable option. So these are very good results, right? I mean, again, in the absence of any of this information being out there, that thing can't be processed, and you've got arsenal pyrite in the ore, so you got to tell us about this. So we've told the world about this, right? And it's no red flags in any of that, right? And it's big flashing green light that this is ore that can flexibly be put through a modern, simple mill composed of things like gravity circuits, flotation circuits, and leach circuits. We're not talking autoclaves or anything like that. We're not talking about any particularly new technology and that's required to treat the ore. It's a very traditional product that has that type of recovery in a traditional mill flow sheet. So, it was as good a result as we could have had, and it's filling that vacuum of information that not just investors have had, but which all the corporates have had, right? Because the corporates have not been doing metallurgical work on our samples, right? This is the first time that a comprehensive suite of samples has been processed and shown to the world, and it was designed to be representative of the resource. It was selected. The composites that were selected and the lithologies that were selected to be processed were selected to be representative of the deposit.
Your best case scenario here shows 94 to 96% recoveries, but that's assuming you sell flotation concentrate, and it's assuming a payability of 90 to 95%. You don't think that the levels of arsenic that you have on here, sometimes above 0.5% and the 4.6% in the concentrate, you don't think that's going to influence the payability factor? Or, I mean, the payability factor that you're assuming here, 90 to 95%, you still think that's achievable with this level of arsenic? Am I getting that correctly?
Yeah, I think yes, we've looked at precedent situations. We've looked at offtake contracts. We've sought guidance from potential offtake partners under Ausenco's leadership, and of course, Ausenco were on that press release as well. Obviously, as the supervising agency here, and I think at this stage we are confident enough to present that as a viable option with that range of payability factors. And with that level of arsenic in the float con, which again isn't a particularly surprising result. And, the payability factor is based upon the gold arsenic ratio very much. And this is, we'd expect this to be a high grade gold concentrate. And so that's an important, if you're sending a lower grade product with arsenic, you're going to get a different result perhaps, but given the sort of grades that we would expect to see in a float con here, we think that's doable. I think for us, we would, we'd probably be showing the 90% as our base case, because that is a flow sheet that we would have full agency over at this stage, right? We don't have to do a what if around that. What if we've got an offtake contract with the buyer for this product? And so that's a perfectly fine result to have as a base case. I think the concentrate sales scenario we're comfortable is feasible, is market. Without the contract, I think it's still a what if, but we are sufficiently, we went out for terms. I mean, we've got data to support that, and which is good enough for us at this stage and good enough for Ausenco, and presenting it as a viable option. And again, I'm comfortable to show that. And of course, just for your viewers, how the calculation goes here is that you do your gravity test, and you get a certain amount of gold after the gravity, so you bank that, and then you take the gravity tails and you put them through the flotation concentrate, and you get a certain gold content in the flotation concentrate, and then you're selling that to the offtake partner. They're getting if they're smelting it, they're getting a very high recovery. They're getting almost all the precious metals out of that. So you're getting that result. Then you're getting a payability against that. But you've also got the flotation tails that have gold in it, and so you're putting those through a leach, and you're getting probably on site, and you're getting a recovery on that with gold. And so you add the gold recovery of gravity, the gold recovery of the smelting of the flotation concentrate, and the gold recovery of the tails, and you apply the payability factor on whatever gold you're getting off the concentrate, and you end up with the final results, right? So it's kind of an arithmetic summation of all the recoveries at each stage of the flow sheet. That's how you arrive at it, right? So each one of those results, 86, 90, 94, 96, is derived the same arithmetic way at each stage in the process.
I understand this is very forward-looking, but looking around in Quebec and maybe outside of it, who do you think this concentrate ends up with? I mean, where can it be smelted while potentially achieving these payabilities?
Yeah, I mean, it's far too early to talk about
Mm.
that, to be honest, right? I mean, that's getting ahead of ourselves. Um, you know, it's too early to talk about that. But I think there's it's a viable option, and a lot of the end users for mine concentrates are in China. I mean, that's a destination. Um, one peer company, Skeena, developing a project in BC. I mean, that's a concentrate that's going to end up in China probably. That's a natural buyer for that type of concentrate. That'll be an obvious and thing for them to do. So, given the sort of geographical proximity where they are and the logistics of that. So there's different options, but it's too early for us to sort of talk about that in
What
our
I'm
project.
glad you bring up Skeena because I'm thinking, what projects are you using as comps here, or what are you benchmarking against? Because you note that the again the arsenic levels that we're talking about here in the final concentrate they go up to 4.6%, and you say that's consistent with precedent projects in Quebec, specifically in the Abitibi and offtake threshold limits for concentrations of high grade gold projects. That's out of your news release here that I'm looking at. Which projects are you talking about? Where are they sending it? What are their payables?
Well, the obvious analog project for us is the Lapa project, right? Because and we talk about that as an analog a lot, because that was a very similar style of deposit in the Pichet rocks, just to the east of us, high grade, narrow vein type deposit. That went through La Ronde, and there was a mill established at La Ronde to take that ore, and they did a whole rock leach, right? So it went out so they did the first of our three options essentially, and it went out into the La Ronde tailings. There was a tailings management strategy for that. So the metallurgy of Lapa was very similar to ours, also an arsenal pyrite association.
Mhm.
Um, and so that's an obvious analog, right? Um, you know, an analog company, Skeena, is a company that's proposing, I believe, to sell a concentrate to an end user, right? So there's a bunch of others as well that have chosen various different strategies around this. Uh, those are two good examples that we can cite because they're both very public examples. You have to excuse me. I'm not uh, I usually don't like to talk about other people's projects too much when I get that question because I think we in the mining business should always be responsible for our own story and our own projects, and we shouldn't be representing the metallurgy or the processing philosophy or the decisions being made in other projects because every situation is different. The chemistries of metallogies are different, right? It's not just an arsenic thing. Do you have anything else in there? Is there antimony? Is there mercury? Is there other? What else are you dealing with in terms of your products, right? For us, it's that arsenal pyrite association, but everybody's different, right? And everybody has different challenges and different chemistries, and you make decisions based upon your own metallurgy. But for us, representing our project, um, this is a very O'Brien is not unusual metallurgy, especially for that part of the world. Very, very common mineralogical association. Not untypical results we're seeing in the metallurgy and the recovery numbers, and in this case, in arsenic, and giving us multiple options we think for processing.
Hmm. But you're not assuming that the arsenic will require additional treatment before going to the off takers, are you? I mean, that's really why I'm asking for a comp, albeit additional processing again, like stabilization, or maybe blending it with lower grade material, which would then have to come from somebody else, I assume. I mean, is that an assumption that you have that the arsenic, that you would have to pre-treat the ore, potential ore, because of the arsenic?
I No, I don't think so.
Hmm.
Look, I think what do you no, I think uh um I think if you're leaching an ore, you've got to have water treatment, um because to deal with anything which becomes soluble and mobile, and that's quite typical in most, well, almost every modern mining project has water treatment. And what are you treating the water for? Are you treating it for any specific metallurgical element? Are you treating it for TSS? Or, are you treating it for ammonia? So every mining project in this day and age has that built into it, and some things are harder to treat for from others. Ammonia, it's quite hard to treat for. Arsenic's actually quite one of the easier ones, I think, to treat for. So, um, but no, I don't think we're talking about. I think how the tailings are managed is the back end of things probably are more uh, uh, need require more thought than the front end of things in this regard. So, how are you disposing of your tailings? Are you blending your tailings with other types of tailings? Are you doing a lined tailings facility? I think that becomes a relevant discussion. And again, we see options there. But in terms of the front end, um, no, I think that's the way you proceed.
What about a good point that you bring up on the tailings? What about permitting and potential environmental hurdles because of arsenic or arsenopyrite contents? That's something that Quebec has a framework to deal with on a reasonable time frame. Is it predictable? Is what I'm asking.
Well, Quebec is one of the best jurisdictions in the world for resource development because it is predictable and there are reasonable time frames and the regulatory agencies are staffed by knowledgeable people. And stakeholder groups and communities are familiar with mining. So um, uh, all of that is, and I know that from experience having permitted and built a mine in Quebec. So it is one of the best places in the world for all those reasons. And yes, the metallurgical, geochemical characteristics of your waste products are a key focus of any mine development process. So that is obviously if you have something like an arsenopyrite signature in your ore, then that becomes the focus of that process. Um, uh, Other mines out there will, the focus will be, I mentioned ammonia. That's a very current and critical focus for a lot of mines who are developing a waste product that might be high in ammonia.
Mhm.
We don't see that as our particular issue, but I know that's a particular issue in other mining situations, and that's comes up in the permitting process, and it comes up in how you manage your waste products and how you treat, for example, water. So every project is specific, I think, and the specificity of every project has a regulatory, focus, and then you act accordingly, right? So it's a very general answer, but I think that is a good answer because that is how the process works, right? So again, we don't see any red flags for O'Brien based upon the data we are seeing in these, comprehensive metallurgical tests.
What about the historical tailings? Is there any environmental work that you have to do in 2025 or beyond, specifically for the historic tailings? Yeah, but from the operation that was ongoing there before.
So the old mine has been fully reclaimed and is now not to our account in terms of any future reclamation liabilities. And that includes the old mine, which is currently flooded, and the historical tailings facilities. So we don't touch those for that reason. I think all of our new resources on the eastern side of the new mine. So I think our current conception for mine planning is not to reuse any of the old mine infrastructure. And that view has evolved. I mean, at one stage we were thinking, well, can we dewater the old mine, take advantage of the fact that there's a kilometer deep shaft there, rehabilitate the shaft, maybe for ore hoisting, rather than people and use that. And I think it's clear that the better way forward is just to do a completely new mine access over towards the east, where we have the bulk of our new resources, um, and then not seek to dewater the old mine and not seek to um, to disturb the historical tailing site again, which has been fully kind of reclaimed and turned over to the account of the province. Um, should we end up mining down below the old mine? I think and certainly that deep hole shows us that there's resource down there, right? So that may in the future change, right? But I think at this stage, let's keep it simple and let's just think about a new, ramp-based mining project on the eastern side of where the new resource is using its own infrastructure.
Does that well, that essentially lowers your environmental or your potential environmental risk then in that case.
Yeah, it makes it simpler
Okay.
for sure. Makes it simpler. Um, uh, yeah, and simpler and cleaner for a regulator to assess what we're doing.
Hmm. Matt, I can imagine you're getting tired of looking at my face. So let's talk about your plan for 2025 and work toward wrapping it up. And you say that you're fully funded in that January 13 news release, as well as let's talk about the funding. Does that mean that you're definitely won't be raising capital in 2025, or is there room for you to get opportunistic anytime soon, given that, I mean, your share price performance is one of the few charts that I see going, from lower left to upper right. So typically, you take the money when it's there type of thing, or is that not how you see it?
Well, so you know, this is the question that the CEOs of the junior miners get a lot, and I'll tell you that Radisson finances every year, right? We raise capital every year because our business requires risk capital to be raised and spent on building value in the company. We did a raise in October, 7 million. It was very successful, upsized, non-brokered. So we ended the year with about 9 million. So the project that we put out, the drill budget we put in January is fully funded, right? 6.8 million we're going to put into the exploration, and that leaves, the balance is hard dollars, and that's almost 2 years worth of corporate burn. Our corporate burn rate in this company is only about 1.4 million. It's very low. So there was so we're good to go with our treasury. I have learned to always say never, when it comes to financing, because we are a risk capital based business, and that's the nature of the game. But always good to have money in the treasury. Always good to be able to say that your programs are fully funded. Ours are, and we're focused on the business of the company right now.
Hmm. 1.4 million on G&A is what you're saying or what you're budgeting here for 2025. How much of that money is going to go toward marketing, and what's the plan for marketing?
Well, I think marketing is a reasonably big budget for a company of our size. And that is we've got a pretty active online presence. We do a lot of outreach and communication. We go to a lot of events. Um, so it's a of the 1.4, it's a healthy dose of that. What we don't spend a lot of money on compared to other companies is facilities. So, I'm in the solarium at the back of my house here in Toronto, right, with the dogs wandering around and scratching at the back door. Um, our head office is actually at the project site, and it is attached to the core shack of the project in just outside Cadillac in Quebec. So again, we're not holding down expensive facilities here. We don't have a particularly big team. Um, we've got a small group of very competent professionals and a very good geological geotechnical support team in at the project site in around Noranda. Uh, so that burn rate is quite modest compared to others, and I think the money in that burn rate is going the right places. We're also, as we do things like metallurgical work, milling assessments, PEAs, um, again, that is coming out of primarily hard dollar resources as well, that type of work. A lot of that work was done last year. Some of that work's happening this year. But again, we're talking relatively, well spent, well budgeted, modest amounts of money to achieve some positive results. So I'm not a that's all, so that $1.4 million is money well spent. I'll also say, when you're drilling, your drill costs in the Abitibi are some of the lowest, certainly in Canada, right? You're dealing with competitive drill contractors, more than one. Everything's available: people, fluids, drill rods, expertise. Um, Everyone goes home to their own beds at the end of a shift, right? People are available. Access is great. So, last year when we were drilling from surface, well, we're always drilling from surface, but we were drilling shorter holes from surface primarily. We weren't doing, we were getting about $175 dollars per ton Canadian, dollars per meter Canadian all in, which is remarkably low, right? I mean, I remarkably low. When we're doing these deeper holes with directional drilling and wedges, we're probably up to about 225, 250 a meter all in, because it's deeper and it's more technical when you're bringing in specialized people to do the directional drilling. But it's, again, that's remarkably low. If you're up in the Arctic, if you're helicopter supported in the Yukon or BC, you're kind of double that, right? Easily. So our dollars and our drilling dollars go a long way in Quebec.
I can tell that you do a lot of online marketing, but the fact that you actually have a decent microphone that I can hear you through, because most of the CEOs I talk to, they sound as if they're in a church. So this is actually good. Who do
I've
you
got a
want
decent
to?
camera as well. You
Yeah,
know,
it follows you
I've
around.
invested.
Actually, I could see. Pretty
It
cool.
does. It's well, yeah, it does.
High tech, yeah. You should somehow figure out to bring your dogs in the framework, and I think it's gonna attract a whole lot more attention. Who do you want to attract with that marketing though? I mean, I understand that online marketing might be more retail focused, but comparable question to what I asked you before when I asked you about who's the PEA for, who's the marketing for? Is it retail institutions? Or are you going? I mean, when you go to conferences, what kind of conferences are you choosing? Who's the marketing for?
So, I was at a conference last weekend in Vancouver, the World Outlook Conference, a terrific event. And there were probably 1,000 people in, this was the Western Bay Shore, in Vancouver, probably 1,000 people in the main auditorium listening to keynote speeches by a variety of different investment people, oriented people. And there was a select group of companies there from a wide range of different sectors: real estate, tech, energy, mining. So it was, and each one of those 1,000 people in that room was an investor and was making an active choice to pick a certain investment or a certain company. That is really important. And I think in my career, um, in mining and mine investment, I've seen a big retreat away from the institutional investor that has a fund manager with the agency to pick a stock. That world is shrinking. And so much money institutionally is going to ETFs and passive funds. And Radisson is not on an index. And we've got a healthy market cap, especially now of 120 million, but we are not being traded by those passive funds, right? And those ETFs. And so those 1,000 people, knowledgeable, informed people who are being told about, and we had a very, very full room in a breakout session for our presentation. That audience is very important to us because they are the people who are investing in your stock, creating, building value, and creating trading liquidity, which is really important. So I think, to be perfectly honest, as my career has developed in the mining business, I've come to appreciate and value the retail investor. Let's call them the retail investor. It's almost a prejudicial term because I think it is a bit of a prejudicial term. The informed individual investor who can be in some cases of significant high net worth, who is making a conscious decision to invest in your company, right? So that is a really important market for for the mining industry, and it's a really important market for the mining industry for much bigger companies than Radisson Mining Resources, right? Um, and I think uh, um, uh, I I did a big financing, in my career back when I was the CEO of Marathon, and we had every institutional $150 million. And we had 100, every institutional investor, almost every institutional investor out there was in the book. And long only precious metals focused institutional investors from North America and Europe, right? It was very well invested financing, great book, and and we discovered very quickly we had them all. We had no incremental buying around that deal because they'd all bought the deal, and and that experience, and ultimately that was a successful financing. The people who bought it did well, and have come out ahead on that quite nicely. But the what I understood at that time was that the retail audience was the incremental buying, right? They were the people who were buying and selling, trading the stock, creating liquidity, and quite often with to important, significant amounts. So, so you ask me who we were marketing to. Um, uh, I spent last week on a marketing trip right across Canada. I was in Toronto, Montreal, Vancouver. And my scheduled meetings were with institutional investors all week. Those were very important meetings and went well. And I ended the weekend with 1,000 people in a room in Vancouver and came away thinking, well, I'm ending the week on a high because that is the audience, right? And that is the group of investors that are really important for companies like ours, right?
Hmm.
So no kind of I think I've realized the longer I've been in this business, no meeting is too small, no investor is unimportant, right? Uh, and In the modern mining business, when there has been so much of a retreat away from actively managed institutional funds picking your stock, that's the way of the future as well.
Hmm. I hear a lot of talking about the share price and the volume, and that is, of course, very important for non-revenue generating companies, especially in the exploration space where R&D essentially costs a lot of money. What are other KPIs that you'll be judged on by the board? I mean, I know that's something that typically it doesn't really get communicated because it's complicated, it's internal and all these things. But what is it that your board judges you and the team on?
Um, Look, I think um, I'm considering my answer carefully here. Um, Ultimately, mining boards. This is a balance, right? Professional, competent mining boards, and I'd say Radisson is a very competent, very professional, very experienced mining board. They are looking to see real intrinsic value built in the business, right? What is the plan? And how did you get from A to B? And they are understanding that the mining business, especially the junior mining business, the early stage mining business, is about building the value of an asset or a group of assets. And that value will be eventually um, delivered through a transaction or through a operating project, right? One or the other, right? Um, uh, to get there are certain professional um, duties or actions that the company needs to deliver on. Are you building a good team? Are you meeting all of your external regulatory or stakeholder hurdles or thresholds? Um, are you doing a good technical job with the business at hand? And are you communicating what you are doing to your investment audience such that they will deliver the value in what you're doing through your share price, and such that they will be there to support you with new investment when you go and tap that venture capital, risk capital world to seek the funding that you need for your business, right?
Mm,
So, um, how that's achieved, that capital markets part of your business, is not necessarily, in my experience, and some may treat this differently, hardwired to specific KPIs, right?
mm,
Um, KPIs based upon trading metrics or um, analyst targets or um, uh, you know uh, uh, other quantitative KPIs that you might generate around that business, right? A lot of it is somewhat subjective, um, and um, and based upon um, again, I'm picking my words carefully here, based upon a sense of good, let's call it a sense of goodwill, right? Maybe I'm being a little overly philosophical here about how junior mining CEOs kind of do the capital markets thing, right? But a sense of goodwill. Are shareholders aligned with what you're trying to do? Are they aware of what you're trying to do?
mm,
Right? Is it a sensible thing you're trying to do, and that's reflected in the views of people? Is the feedback that's coming back to the board, good, competent blue chip boards full of mining people, know people, and they're talking to people. I don't operate in a vacuum, right? They're told how good a job I'm doing by all the people they know in the mining business, right? So um, nothing is hidden, nothing's kind of in a vacuum. So what is the sense of goodwill out there on what is being achieved? Some things are out of your control, right? The gold price, drops $1,000 an ounce, tomorrow. Every gold mining CEO is going to have a dreadful KPI, right, to report to their boards on the trading of the stock, right?
mm.
So that's an extreme example, but some things are out of your control. Um, but I think it starts with a good business, right? What is the plan? What is the direction the company's going? How well are you implementing that plan? And are you achieving goodwill in the market with investors towards what you're doing, towards the concrete things you're achieving? And is your communication strategy, again, a professional kind of part of your plank of your business, properly describing that good work, right? Those are a long answer to your question, right? But it's not really a kind of in my experience, it's not really a KPI driven type of world. That one.
That is, I appreciate that answer, and I appreciate you being thoughtful about that answer, because that is oftentimes the reality. As a speculator myself, I might want to see something that's very specific in its volume, its share price, it's that size of the deposit, and done. It's black or it's white, but that's often not the case. It's much more complicated, and I'm finding that through spending time in the space, really. What do I understand you're here to present a compelling story, in that you yourself are bullish on your own story, but nothing's ever perfect. What's the highest risk for Radisson in 2025? What keeps you up at night?
I think we're working in a very um, turbulent world, right? We are a Canadian resource stock, and we're not immune to everything else that goes on in the world. And we are a safe haven investment. And so the gold price is tracking up in reflection to a whole bunch of geopolitical events in the world, which are very understandable, um, but driven by factors very much out of our control, right? So any resource developer or exploration company or mine producer has to be somewhat concerned about the outside world. And I wouldn't have said that 5 years ago or 10 years ago, but I'm not telling you anything you don't know, right? So, um, So I worry about that. The number one duty of every junior mining CEO is to make sure the company is properly financed,
Mm,
right? Our company is properly financed, right? But that is that shareholders are not served by companies that run out of money,
mm,
right? And so that has been a lesson of my entire career, and I've had many older and wiser people that I've worked with previously who have shared that perspective with me, and I agree with 100%. So ultimately, I don't lose sleep over whether Radisson is well financed, because Radisson is well financed, and but if that should be something that keeps the CEO of a junior mining company up at night.
mm.
Um, and then I don't lose sleep about the quality of the asset, right? I think the asset has got lots of very high qualities, and I don't lose sleep over the geology of things. Uh, I uh, and this is also a philosophical question, but I've been the CEO of a producing company. I've been the CEO of development companies. I've been the CEO of exploration companies, and having an injury or God forbid a death in a company um, is the worst possible thing that can ever happen. It swamps any other consideration. And so you have to take health and safety completely seriously because it's not just a routine you go through with your toolbox meetings in the morning. It's not just some slogan. It's not just that report that you get for the first 10 minutes of a board meeting. Um, it's not the safety share that the engineers do almost kind of as a culture before a meeting. It is the reality of actually uh, telling the world that somebody has been injured or somebody has, God forbid, lost their lives. And
Is that something you've dealt with?
I yeah, we had in my career when I was a lieutenant at Aber Diamond Corporation and the Diavik mine was being built. There were two fatalities in the building of the Diavik mine, workplace fatalities. And we were the non-operating junior partner, but that was my first exposure to it. And it was an industrial accident at site, very tragic. Um, and there was a traffic accident, very tragic traffic event that caused the death of somebody when we were building the Renard mine. Um, that was not on our property, but it was a contractor that was kind of coming to the site, and there was an accident. So I have I'm very fortunate that I've never had a workplace fatality within the operation itself of an operation I've been responsible for. But I've had sufficient, warnings, I guess, through these events that happen peripheral to things I've been involved in,
Mm.
to get the appropriate message as a CEO that you're the top of the responsibility pyramid and it's important, right? Um, so again, that's a philosophical question, um, but that is something that should be keeping people up at night, right? That consideration.
What about community relations? That's something that you see more and more issues with things. You'd expect things to be handled better, but oftentimes I see them being handled worse than before. How's that in your case? Do you have all the agreements with the First Nations and local communities in place to keep working? Are they happy with you being there?
So I think it's early days for us on that one. We have started a consultation program. I think one thing I'll say about that is it's relatively new in the Abitibi, um, and it's overdue in the Abitibi in Quebec. I think to have a program of First Nations consultation and First Nations involvement. Again, I mentioned the Diavik mine. Diavik was subject to 5 different IBAs, and those were developed in the late 90s, which was quite new at that time still. Uh, We had an IBA for the Renard Mine, Northern Quebec, with the Crees, and then uh, uh, we had partnership agreements, not IBAs, but partnership agreements with two Mi'kmaq First Nations on the island of Newfoundland, which was Halipum Wapagek when I was developing the Valentine mine. So all of those situations were a little bit different. So I'm very familiar with uh, uh, the First Nations partnerships and relationships within the context of resource development in Canada. Um, in the Abitibi, there are First Nations. There are IBAs now being developed. La Ronde, an Ecoegos project next door to us, relatively recently did an IBA with local First Nations. Um, there's also the communities in the Abitibi. So for us, that's obviously Cadillac, because we're right in the town of Cadillac. There is Presac, which is a community, a very nice lake sort of setting to the north of us. There's Amos, the town of Amos to the north of us, is Ranaranda to the west. These are all the communities that will have a social and economic kind of impact by what we do. Um, so I think again, Radisson's a company that's been focused on drilling for many years, maybe less interested in what a development process looks like. And so for us now, especially with me coming on board, bringing that background that I have, we've now got community engagement, stakeholder engagement, First Nations engagement, kind of further up the priority list of what our business should be about. So that's really just getting started for us. Um, and so far so good, right? It's a very interesting time in mine development in the world generally, because there are some things that are I think there's now a sense that um, in the past, what we've done as a mining community is we said, well, the basic justification for our project is that it's economically viable. It makes money. So there'll be jobs and there'll be contracts, and that is the principal justification for the project. And we will create a whole bunch of negative impacts, social or environmental impacts, that we will mitigate. So our positioning of our projects as mine developers has been a very simple justification. It's going to work. It's going to make money financially, and let's look at all the things that that will be a negative, and we'll mitigate those, and we'll show the regulator how we're going to mitigate those, and with that demonstration of mitigation, we're good to go. I think that's changing. I think now what regulators and governments and communities want to see is a positive justification. What's going to be better about our lives and better about our communities and better about our environment after you've finished than was before, right? So it can't just be about the commercial aspects of this and short-term financial gains and the mitigation of the negatives. The world has to be a better place after you than before, right? So it's a different sense of justification, right? And I think that's the way certain high-profile regulatory processes have gone recently, especially not especially, but including in Quebec. And that's good for us to know as we start out thinking about a development scenario for this, even as a spoke in somebody else's wheel, because we can start thinking about those things ourselves. How will the local environment in the world and these communities be better after we've done our mine development than before?
Mm.
It's a subtle distinction that's changed, but I think it has been a change.
There sure has. I like listening to these older speeches by Peter Monk, who started Barrick Gold, and he used to think and talk about these things, and he was kind of a pioneer really in his time, and he came from a whole different sector into the mining space. Very interesting story too. But what else, man? What am I forgetting to ask you here at the end? What did you come here hoping to talk about that I failed to bring up?
Tony, you are the most detailed and comprehensive person I had conversations with about such things. So
Thank you.
you've drilled me on the corporate future, on financing, on arsenal pyrite, on our drill plans, on the philosophy of things. I cannot think of anything else to discuss.
Thank you. I appreciate you saying that, and I'm looking forward to hopefully seeing you soon and having this conversation over a couple of drinks. It'll be great to see you again. But
That'll
thank you
be
so
my
much for sitting
pleasure.
down.
Yeah, let's do that.
Thank you so much for doing this.
Thank you.
And thanks to everyone for watching Resource Talks. I appreciate your time. And I do have a couple of more things to say, though. The fact that this company was interviewed here today does not mean that they are necessarily a good or a bad company. I am not here to endorse or attack anyone, but simply to ask questions. If you find that I failed in my duties in asking a question that you would have liked to hear an answer to, which will happen as I am not an experienced interviewee, please let me know, and I will try to correct that mistake in a future interview. As mentioned at the beginning, please understand that mineral exploration and development is an extremely risky business, and losing money is the norm and should be the expectation. Seriously, this is a very complex sector, and the performance of individual companies typically depends on many different moving particles. Too many really to count, but they include company specific factors like geology, financing ability, and really many others, as well as particles that are outside of the company's control, like geopolitics, macroeconomics, commodity prices, and many more, all of which makes this space nearly impossible to figure out. Moreover, these companies are typically in the pre revenue stage, which means they rely on the public markets for financing and they don't get any money of their own into the company. So they have to depend on the public markets for the financing of their operations, which often results in shareholder dilution. Furthermore, as a general rule of thumb, you'll be better off understanding that all company communications online are intended as marketing, albeit this interview or their website and their presentation and their social media, the photos that they share on there, whatever else it might be, or even the social media accounts which you thought were your friends and told you about the new hot stock. That's all intended as marketing, and you should understand that. And although I do not make buy or sell recommendations because there's a clear conflict of interest given the nature of my business, I'm simply here to ask the questions. Many out there will do exactly that because that way they get more money out of the company's pockets. And you should be aware of that inherent bias. That bias is not always going to be clearly disclosed with everyone out there. So it is safer for you anytime you're watching any type of company specific content, yes, including this interview, just approach it with a dose of skepticism and assume that the party telling you about it or presenting it or whatever it might be is biased because there will always be a bias. Again, albeit disclosed or not. The fact that I have no idea what I'm doing should already be clear to you at this point. I don't have a long enough track record of consistent investment profits, so I should under no circumstances be considered an authority on anything. And although this might sound amusing to you, it is definitely not amusing to me, and it is not intended as a joke. I am simply pointing out a fact and warning you not to rely on anything I do or say because you risk losing all of your money. Unfortunately, at least to my understanding, nobody out there has any special abilities. The CEOs do not possess any superior knowledge, and they cannot know what's going to go up, what's going to go down, or what's going to go in circles. None of us know whether any of the company's activities will result in a success. And even if they did result in a success, we don't know what that's going to do to the stock price. And given that we're talking about high risk activities here, most of the times it will result in a failure. Also, unfortunately, try as I may, I'm not always going to catch all red flags or all challenges with the companies. So, yes, this show is called the CEO Barbecue in an effort of me being cute, essentially. And even if I did ask a few tough questions, don't rely on this being all of the tough questions. Again, these are complicated startups with many moving particles, and I am conflicted given the nature of this business, obviously, but I'm also not experienced enough to catch all red flags. Therefore, I cannot guarantee the quality of anything presented in this video, and you cannot hold me responsible for any losses or damages stemming from the way you decide to use this interview. Viewers and listeners and readers acknowledge and agree that the information presented herein does not constitute a solicitation of an offer to buy or sell any security or instrument or to participate in any trading strategy. Resource Talks and all parties involved in the management of the business strictly disclaim any and all liability for losses and or damages, whether direct, indirect, special, or consequential, or other consequences, however so caused, arising out of any use or
reproduction of the content published by Resource Talks, or any decision made or action taken in reliance upon it. By consuming this content, all consumers vow to release Resource Talks and all the parties involved in the management of the business and the production of this content from all claims, proceedings, or consequences. This is all legal talk that I'm reading off a piece of paper, but it is important for you to actually stop for a second and understand. This is all to say that you shouldn't blindly trust me or anybody on the internet, and you should always do your own research after you've consulted or before you've consulted with a professional licensed investment advisor, which none of us are. Once again, social media is meant for entertainment. Setterplus.ca is where you actually do your research. That's where you'll find the company's official filings. Now, I encourage you to read and analyze the management information circular, the financial statements, the management discussion and analysis, and whenever available, the NI 43-101 technical document. If you don't understand everything in those documents, the chances of you losing money become even higher than they normally are in this space. And as mentioned earlier, the chances of even the best analysts in this sector losing money are extremely high to begin with, since this is venture capital and it is not for everybody. I'll leave you with one of Charlie Munger's best quotes, or one of my favorite Charlie Munger quotes, which I wish I'd listened to more often earlier on, which says, quote, "If you don't understand it, don't do it."